This video is conducted by Loan Process Solution, LLC. Disclaimer: the information provided in this video is for informational purposes only and is not meant to take place of legal advice. Hello everyone, just as a reminder, we're here to answer your questions, so please put your questions in the inbox or you can send us an email at simplyasharriet@outlook.com. We're ready to get started, so let's do it. It's not all about your credit score, so let's take a closer look. These are for you. Do you all remember when we had that financial crisis in 2008 and 2007? Just by a show of hands in the inbox. Thank you guys. Okay, so anyway, this was a time where the market crashed and it got hit really, the financial market got hit really hard. But prior to the market crash, lenders sold variable rate mortgages to borrowers often. So a variable rate mortgage is an adjustable rate mortgage. But what was different then is that the terms were just crazy terms. I don't know if you guys remember, but there was an interest-only type loan. You can choose your own payment, which means that, it can be an adjustable rate in 1 month, and then a couple of months later it can be a fixed rate. So that was really a crazy type of loan. And then balloon payments, that's when at a certain time you have to pay off the entire balance on a loan. And then the adjustable rate mortgages, called ARM, they had extremely high caps. Okay, and so what a cap is the maximum limit on a rate, and those limits were extremely high. So this was a time across the country where people with high credit scores, was really attracted to these mortgage products, right? And so what happened is there was also no document and low document. Can you imagine that? No document and low document loan products where you didn't have to document your income, right? You can just state your income and not document it with tax returns, right? And so your income wasn't really verified or documented. And first-time home buyers, as well as investors with high credit scores, purchase properties, right? They purchase properties to rent and also to sell. And there was a lot of flipping of properties. And we can talk about that a little bit later, or you can do a little research on your own to find out more about property flipping. I don't know if you guys heard of that before. But so after the market crashed, people found themselves owing more on their mortgages than the properties was worth. And so the mortgage was no longer affordable. So this was a time where millions of people across the country lost their homes. Literally millions of folks lost their homes, right? And these were people, a lot of them had high credit scores, and their credit scores took a huge drop. And so many of them found themselves underemployed, having to file for bankruptcy, short sales. There was a lot of short sales, and foreclosures, a lot of foreclosures. And yes, everyone wants a high credit score. I want a high credit score. The reason is because you qualify for the lower interest rates, and you also qualify for the better loan terms. But don't just listen to the hype, despite the hype, right? It's important to understand that you cannot solely rely on your credit score. You can't, because lenders no longer do, and neither should you. Okay, so we're going to cover some of the other information that's on the credit report that the lenders focus on, other than the credit score. Okay, so one of the things that the lender is going to pay a lot of attention to is the way your name is spelled on the credit report. All right. And there is a section of the credit report that will show any name variances. It may show a nickname if you're a junior or a senior or a third. If you have a legal name change, all of that matters, right? So you may need a letter of explanation if you have any name variances shown on the credit report. Now, Social Security number, all right? Now, there is a difference between a Social Security number and an individual taxpayer identification number. We call it ITIN. There is a difference. So on the credit report, it will show the date that your Social Security was issued, your Social Security number was issued, okay? So if there are any discrepancies between what your Social Security number is, or if there's more than one Social Security number reporting, you will need a letter of explanation for that as well. Okay, so just keep that in mind. So now let's talk about an ITIN, right? An individual taxpayer identification number. So ITIN numbers are issued by IRS, right? And it's issued to people that that's not eligible to receive a Social Security number, but they file their taxes, right? They file their income taxes. So that's the difference between that is the difference between a Social Security number and an ITIN number. So addresses, your address, your current address, as well as any prior addresses may show on your credit report, okay? And also the dates that's associated with those addresses will show as well. And sometimes there's discrepancies. There might be an address listed that you never lived there before. But so you may need to write a letter of explanation regarding the addresses. And basically that letter is to identify any properties that you're associated with, as well as the date of occupancy. So that letter may be required. Okay. So also employment history. Your employment history and the dates show on your credit report. And the lender looks at that. When you're applying for a mortgage, the lender needs to document a 2-year history of employment. So whatever information is on the credit report will be compared against what's on your application. So again, that's one of those areas that lenders look at on the credit report. So we're going to talk about an area of the credit report called public records. Judgments and liens no longer report on the credit report. That's something that changed not too long ago. But the lenders still have tools that they can use to find out if there are any judgments and liens. Okay? And one popular tool is called LexisNexis. Okay, that's just one. But there are tools that the lender has to determine or to find out if there are any foreclosures under your name or any properties that you owned and went into foreclosure. And an FYI, in some states, bankruptcies, foreclosures, repossessions still report in the public record area or section of the credit report. Okay. And now let's talk about payment history. We know that credit reports show payment history, right? Most of us know that. But the lender takes the time to actually go through each account that's on that credit report, whether it's an open account or a closed account, to see what the pay history was for each account. For example, you may have an account on the credit report that has an outstanding balance, meaning that you have a balance. It's not shown as zero. It doesn't show that you've already paid it off. It has a balance. But for some reason, it's not showing a current pay history. The lender may ask you for a letter of explanation. Not may, the lender will ask you for a letter of explanation and documentation for that account if that was the case. Okay, so one other thing I want to bring to your attention, even though the credit report shows pay history, you may be asked for additional supporting documentation regarding the history, the pay history for an account. Like, for example, let's say if you have a mortgage shown on the credit report and it shows that it's never been late, right? The lender may ask you for a mortgage statement. And the reason that a lender would do that is because some people, you may have gotten the loan modified, right? And so on modifications, the mortgage payment will show current, right? They're not showing late payments on modifications these days. That's mortgage modifications. But if you provide a mortgage statement, it's a possibility that that statement will show that you have been late, okay, even though the report says you've never been late. So that's one thing that you want to keep in mind, that even though your credit report has a history shown, there may be times, and not only with the mortgage payment, sometimes with student loans that happen as well, okay? And regarding the payment history, the lender is going to look for any duplicate accounts, right? They want to make sure that they're not calculating your debt to income incorrectly. They want to be accurate. And you would want the lender to be accurate on that too. Because sometimes the credit report will have, it's one account, but it has partial loan numbers, right? And remember, the lender is using a tri-merge credit report. All three credit bureaus are reporting. So one might show part of the loan number and the other one might have the other part of the loan number, but it's actually the same account, right? So we don't want to count any debt more than once, right? So the lender is going to double check to make sure that you don't have any duplicates. And I think that's a plus for everyone, especially, you know, you want to make sure that that debt to income is being calculated correctly. So another area of the credit report is types of credit. The lender looks at the types of credit that's on the report. Okay, and just to give a little overview, you have student loans, you have leases, they're open-end type loans. That's your lines of credit, your credit cards, installment loans. That's like a car payment, right? And then you have loans that you may have co-signed for someone, right? And you have your child support type accounts, and then you have self-reporting accounts. Like, that's a fairly new category that's on the credit report, and that's utility bills. Sometimes you can have your utility bills reporting, so that would increase your credit score. We've been seeing a lot of that, and it's been helping a lot of people. But these type of accounts, they're not included in your debt to income. I just want to let you know that. So self-reporting account is not included in your debt to income, those utility bills, but they do help your credit score. I want to bring that to everyone's attention. And then we have rental history, right? That's another area. A lot of landlords is reporting the rental history now on credit reports. And although that helps the credit score, rental history isn't included in the debt to income, right? When the lender looks at your affordability for a mortgage loan, the rent is not included, all right? But if you have a mortgage reporting on the credit report, that's different, right? That is included. That payment is included. So I just want to bring that to your attention. Those rental histories that's reporting, it helps the credit score. It shows pay history. But even though it does, a lot of times the lender may still ask for the standard payment history. Not all lenders are accepting the reports that come from the credit report yet. But again, that does help your credit. So there is a section in the report, in your credit report, called inquiries, right? And what an inquiry is whenever someone pulls credit on you, when a company pulls credit, it shows in this section of your credit report, right? And so if you are in the middle of applying for a loan, or you're in application, or you're in the middle of refinancing or purchasing a home, it's better to not have a lot of pulls on your credit, not to have a lot of people pulling your credit report, because then the question is going to be, do you have a new account? We've already calculated your debt to income. Is it accurate? Okay. Or do you have another account that we should consider? So just know that whenever anyone pulls credit on you, you will need to get letters of explanations, because the lenders do monitor inquiries. All right. And a lot of lenders automatically get a report when a new credit report is pulled on you. So just bear that in mind. Okay. Okay. So I just want to take a minute to give a shout out to everyone who has put your comments and your questions in the inbox and have been sending the emails to simplyaskharriet.com. We have been monitoring both, and we do appreciate you guys for reaching out. We'll make sure that you get your answers, okay? So I just want to give a quick shout out to you guys. Continue to do what you're doing. You're doing great. So now to get back to another area that I want to cover regarding the credit report. This is critical. The lender focuses on this, and that is fraud alerts, right? So a fraud alert is basically a statement from you that's placed on your credit report that says, hey, I experienced fraudulent activity. Before you extend credit, make sure you identify me. Make sure you identify me as the person who actually applied for this loan, okay? That's what a fraud alert is, and that's what it's all about. So it's important that if you have a fraud alert, that the phone number that you have on your credit report matches the phone number that's in your loan application, because whatever number you put in that statement on the fraud alert is the number that the lender is going to contact you. That's the number that they're going to call. So, but that number have to match the number that's on your loan application. All right. And so with the fraud alert, it's critical, again, before you can be approved for a loan. Basically, the lender is supposed to identify you as the person who actually applied for the loan, and they're going to ask you some identifying questions to make sure that you are the person that actually applied for this loan. Okay, so just keep that in mind. The other thing I wanted to tell you guys additionally, you know, the lender used a tri-merge credit report. I might have mentioned that earlier, but tri-merge, tri meaning three, right? So they use all three major credit reporting rules. It's all merged into one, and it's called a tri-merge credit report. And the major reporting agencies is Equifax, Experian, and TransUnion. Those are the three major reporting bureaus that the majority of the lenders use. Okay, so just keep that in mind. So you guys heard of FICO, right? You heard of FICO scores. Well, FICO scoring is, or FICO score is the most common among lenders, right? And that's a way for the lender to determine risk, your credit risk, all right? So your FICO score can range from 300, 300 being the lowest, to 850 being the highest, all right? So have you ever thought about how's that broken out percentage wise? What part of your score represents what? Have you ever thought about that? Well, we're going to talk about that right now briefly. Percentage wise, 35% of your score represents your payment history, all right? And 30% represents the amount that you owe, all right? How much you owe the creditors, right? And then 15% represents the length of your credit history. And that means, how long have you had the account open? That's what that is. And then 10% new accounts when you apply for new accounts. And the last one that I want to talk to you guys about is mixed credit. That represents 10%, all right? So mixed credit basically means the different types of credit. We talked about that briefly earlier on. Like, for example, if you have a mortgage, a personal loan, a credit card, that's your credit mix, different types of credit. Okay, guys, so we're moving along here. I would like to give you guys the address to get your free credit report. So if you guys have your pens and pads ready, let's get ready to write this address down. Now, here it is. Here you go. It is to get a free credit report, and you can get it annually, once a year. You would sign on to annualcreditreport.com. This is the correct site to get your free credit report. So, when you get it, it's not going to be a merge or tri-merge like the lenders use. You will need to do the data entry to apply for all three of them separately, but you can get them. That's the point, and you won't have to pay for them, and they are available once a year. So again, write it down, annualcreditreport.com. Okay, guys, so I have another tool that I want to share with you guys. I found it and I used it myself, and I really, really like it and want to share it with you all. Here it is. It's a good tool to use, and it is a credit report review checklist. A credit report review checklist, and it's designed by the Consumer Financial Protection Bureau. I don't know if you know, but that's a very good site to go to find out your rights and lending guidelines, so you'll be more informed, right? But this tool is excellent, all right? And it is available on their website. Their website is listed here, consumerfinance.gov/owning a home. You can find this checklist on that website, but we're also making it available to you. So if you want to email us, you can send an email to simplyaskharriet@outlook.com, and we'll get you a copy of that free checklist. Again, it is available on the Consumer Financial Protection Bureau website, but we're also making it available to you by sending an email to simplyaskharriet@outlook.com. And then I just want to tell you guys that this is really a good thing to do. It's going to help you understand your credit better, okay? And you'll be able to be more prepared when you're ready to apply for that mortgage if you haven't already. Even if you're in the process, it's just a good tool to have because it's a checklist, and it's about 6 pages. So it'll walk you through, it'll tell you how to contact different companies to maybe clear some things from your credit as well. It's an excellent tool, and we recommend it highly, okay? So these are the topics that we're covering. Here's the list, and it is, why do lenders ask for so much? Pay stubs tell more than you know. Additional income. And in that class, we're going to cover child support, retirement, investment, rental income, bonus, and commission. We have a separate class for self-employment. We're going to cover the loan application process. We're going to cover budget. And in that topic, we're going to cover how to get started and why do I need one. Common terms you should know. That's a class that I recommend everyone take. Bankruptcy, child support, and alimony. We're going to cover, for child support and alimony, we're going to talk about, if you're paying income, if you're paying out in these categories, or if you're earning income from those categories. So that's going to be a really good one. Home inspections. Do I need one if I'm buying a new house? We hear that all the time. The loan closing. It's not all about your credit score. That's the class that we just completed. And the last one that I want to talk to you guys about is freeze or credit alerts. What's the difference? Now, we talked briefly in this session about the fraud alert, but we're going to talk in more detail in this particular class, whether you should have a freeze on your credit or a fraud alert. What's the difference? We want to hear from you, so tell us, what topics would you like for us to cover? And what topics did you enjoy best? And always share the workshops with a friend. Our email address, if you have questions or comments, you can send an email to simplyasharriet@outlook.com. All right, so a lot of you guys have been following us and you've been learning a lot and asking your questions, and I am so proud of what you've done so far. I just want to encourage you, stay the course. You can do this. I just know you can. And if I know it, you've got to know it, and you've got to do the work. And I applaud you for not losing focus. Stay the course. Keep the dream alive.